When you need funds fast, the worst thing you can do is not educate yourself on what it takes to get asset finance approved. You end up experiencing death by additional information requests just to spin wheels and go nowhere. Hello small business owners of Australia, Luke Z from sfcapital. Here for another video in our series designed to help you understand how to use asset finance. In this video, we will be explaining the roadmap you can follow to accurately determine what requirements you need to meet. All roads lead to Rome, but some are definitely bumpier than others. And if the loan terms end up the same, we want to help you get there in the most efficient way possible. There are three possible pathways you can take: low doc, mid doc, and full doc. Low doc is the simplest criteria and is reserved for business owners who have an ABN of more than 2 years and GST of more than 1 year, and they are purchasing a primary or secondary asset. We covered examples of these assets in an earlier video, but they are basically assets with the highest resale appeal, such as cars, trucks, and earth-moving equipment. Depending on the lender, there may also be an additional requirement to be a property owner or have a 20% deposit or a comparable credit reference. For low doc, there is no income verification required, only a standard ID and credit check if all of these criteria are met. Mid doc is the next level up, where the ABN and GST are less than 2 years, but more than 1 year, or it is a tertiary asset being purchased. This may also be called light doc, and that is because there is some income verification, for example, BAS statements and/or business bank statements. Owning property again is advantageous here because it can soften some of the requirements depending on the lender. For example, it can shorten the length of the business bank statements you need to supply. Depending on the lender and scenario, you may also be asked to supply ATO portal statements to confirm your tax commitments are up to date. Finally, we have the most arduous pathway of all, which is full doc. This traditionally means providing 2 years of financials and tax returns, as this is for businesses financing a particularly niche asset or where they don't meet any of the previous requirements. If it is a startup, meaning ABN only 6 months old, then you will also need an accountant prepared cash flow projection and a business plan. Where this option does not yield much better loan terms, there are generally few benefits for going down this path. You may even consider a low or mid doc option that costs more, but requires less effort and is faster. So, the next time you need asset finance, don't just call your existing lender or pick the first option on Google. Instead, find asset finance brokers who can put you in the driver's seat to making a business decision whilst managing all the distractions of applying for a loan for you. If you learned something from this video, please let us know by leaving a comment, liking, subscribing, and following sfcapital on Facebook, LinkedIn, Instagram to be updated on the next video series. I look forward to seeing you in the next one.